What's going on, everyone? My name is Nicholas Merten here from DataDash, and today is February 10th of 2025. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to try to answer a big question on a lot of people's minds. What the heck is going on with Bitcoin? I mean, we've been nearly ranging for almost 3 months now, ever since the rally we saw between September to December. So I want to spend some time here to talk about what's going on in regards to Bitcoin's price. I want to talk about what to look for in order to figure out whether or not we're going to be breaking out to new highs here in the near term, or if we're going to be collapsing down to new relative lows that we haven't seen since back in the fall of last year, potentially providing a great buying opportunity as well. And also we got to centering on altcoins and what this means for altcoins, because there are already some great opportunities presenting themselves in the market. The question is it really the time to buy? We're going to be talking about all this and more as we go throughout the video. If you happen to enjoy it, consider dropping a like, grab a cup of coffee. You guys won't want to miss this one. Okay, so I want to go ahead and start here by talking about what Bitcoin is doing. Why are we ranging here sideways? The first thing I want to emphasize, and I know many people generally assume that I'm the biggest bear in crypto. I love crypto. I have nothing against it. And at the end of the day, I think the number goes up and to the right, generally speaking. But as someone who is trying to remain skeptical and look for corrections, the first thing I want to state here is that what Bitcoin is doing is totally normal and natural. The number doesn't constantly go up and to the right. It does over the long term. So after a rally like we saw, say back between September to kind of November, early December, this is something that's totally normal, right? In fact, it's the same exact thing. It feels like a bit of deja vu, to be honest with you, from what we saw back between late 2023 and going into Q1 of 2024, where Bitcoin had rallied all the way here from 25,000 to around nearly right under $75,000, right? So essentially a 3x in value here, 200% return. These big even levels, these multiples are psychological levels where people are going to probably start favoring taking profits than adding new positions. People who were DCAing probably slowed a bit and instead started dollar cost selling rather than averaging in, right? So essentially, it's an important dynamic to understand here that these consolidation windows are not only healthy, but along that as well, they allow for the spring up of the next rally. Now, there's obviously a lot of other arguments people will make. Some, like myself, for example, would focus on the fact that the market is right now trying to turn the prior line of resistance from the 2021 highs into support. I think there's definitely some relevance there. But along with that as well, we've got to get down to the fundamental question. You can call it manipulation. You can say that there's the price suppression going on from the exchanges, or exchanges are keeping prices way so they can eventually liquidate longs and then rally. We could all sit here all day long. We could point to headlines and try to explain why markets are doing what they're doing. But it usually comes down to a very simple topic. And this kind of leads into what we were talking about earlier. After these kind of rallies, you really need to come into the question of supply versus demand, inflows and outflows. This is a really big theme we echoed back in 2022 and 2023, and it still remains relevant in 2024 and 2025. So essentially what I'm talking about here is whether or not there are more market buyers than market sellers, because market buy order flow or market sell order flow is going to be the determining factor, the single greatest determining factor of where price goes from where it stands here today. If there are more people willing to pay a higher price in order to get orders filled above Bitcoin's current price, it will start moving higher versus those who are looking to sell. And vice versa, if there are more sellers looking to take the best available price to exit their positions versus those who are willing to buy in at the best available price, then in this case, that's going to leave prices lower, right? Now, that might seem relatively intuitive, but when we're taking a look here at some of the inflow data, especially with where the institutional capital is coming, and that's what we're all hoping for here, that is, the thing we've been betting on throughout 2024 as well, and it has played a very significant role, right? We need to look at the ETF inflows. We need to take a look at Microstrategy and see if there are any clear signs or trends they're forming. Well, what we can see here is that where we were having a major acceleration back here between October to December, in fact, we gained, roughly speaking, a little under 120,000 Bitcoin within this window of time, a huge acceleration in just a matter of 2 months, right? So that was a huge jump forward in the ETF inflows in a very short window of time, which led to a very big price acceleration. Not to mention, if you toss in January, not a shy or bad month at all, 50,000, still great amounts of Bitcoin being added. But as we go here into February, in the first week, we see a relatively neutral or dull start to the month. Now, of course, this is really just about a week's worth of data here. It's not something to be absolutely finicky about. It doesn't mean that we're absolutely guaranteed for a correction or collapse. But my main point here is that you're starting to see a bit of a waning here. You're still seeing GBTC outflows still in play here, albeit slowly, but you're seeing also Fidelity seeing outflows. You're seeing a slowdown in BlackRock. Now, we could go into each individual line item here. There's really not much relevancy to doing that, right, for the interest of time. My point here is that net overall, we've only seen about 1.8K new Bitcoin, 1,800 new Bitcoin being added by the ETFs here in the month of February. It's a big slowdown, and this is something that we really depend on for price acceleration. As we've echoed before as well, you've got to keep an eye on Microstrategy, or now rebranded to just Strategy. At the end of the day, Microstrategy or Strategy has been, if not a bigger accumulation force, it's definitely the second most, if not most important accumulator of Bitcoin beyond the IBIT ETF, which is the BlackRock iShares Bitcoin ETF. So essentially, we can see here in the data that in many cases, MicroStrategy, it can outpace the broader ETF inflows. And this is just one particular company here that's going out and buying Bitcoin, right? So we see just how much relevancy MicroStrategy, and as we'll talk about the MicroStrategy premium, play a role in determining whether or not we're going to move higher here. And we can see that those numbers were absolutely smashing back in November and December. No wonder Bitcoin was doing what it was doing. There was so much inflows. Mix that with the ETF, and we were getting some juicy numbers. Step into 2025, and things aren't terrible. They're really not that bad. Again, I'm not here to be doom and gloom or anything. I'm just here to say it's definitely slowed down, right? And you can see that in the numbers. That is not something I'm trying to exaggerate. This is still, I think for most of us, we think of this as oh my God, 10,000 Bitcoin. That's unfathomable wealth. But when we're talking about the broad scheme of things here, right, there is an entire supply of over 20 million Bitcoin out there in existence. Some of them are lost, right? You name it, right? But the thing is that's important to understand is that as that buy side pressure slows, you have to ask the question of whether or not that sell side pressure is picking up, as we've had this significant rally since 2022. Right? And this also leads us to talking about a very important dynamic when we're talking about MicroStrategy being one of the big inflow forces, the big buyers on the street, sometimes bigger than the entirety of the Bitcoin ETFs or big ETFs like IBIT, the iShares BlackRock ETF for Bitcoin. This leads us to talking about the MicroStrategy premium. Now, the MicroStrategy premium is MicroStrategy's share price divided by Bitcoin. This is a custom ratio that we track. And the reason why this is very relevant to watch, some people might wonder why does this really matter? It matters because MicroStrategy, the way they've been going about buying Bitcoin from a fundamental basis, there's no denying this. This is essentially the way they've been able to accumulate a ton of credit or debt to be able to go out and buy Bitcoin, is they've been essentially issuing convertible note raises. So we can see here throughout the past, I gotta get the chart fixed here real quick. Essentially, they've been going out and taking advantage of the premium and the share price people are paying for MicroStrategy and issuing convertible IOUs. And these convertible IOUs generally have a simple principle in mind. Hey, person with $1 billion, if you would like to, for example, have a chance to turn your $1 billion into $2 or $3 billion, or maybe $1.5 billion, which is pretty phenomenal for someone with a lot of capital looking to make decent returns, we would love to issue these convertible notes where you're going to give us $1 billion of your capital. And this is going to give you essentially a convertible note that allows you to do one of two things. Either A, if we reach a certain strike price or a certain heightened share price from where MicroStrategy is trading. Now, let's just say for our example, MicroStrategy is trading at $100, right? Going back a couple of months. Let's say it's trading at $100. The strike price on your IOU or your convertible note is $150, meaning that if MicroStrategy shares go to $150 per share, your convertible notes convert into new shares in the company, and you can obviously sell those shares if you want, you can continue to hold them, but generally speaking, you'd be able to make, potentially at that strike price, a 50% return immediately. You could sell it right away, that's fine, whatever, and you would make $500 million. Now, to someone with $1 billion, that sounds really great. And on the other end of the spectrum, let's say that strike price doesn't hit. Well, at the end of a term of 4, 5, 6 years, MicroStrategy would pay back the $1 billion in cash on that convertible note, right? So this is the whole structure of how MicroStrategy has been raising capital. It's a simplified version, but that is generally how they've been able to raise. And as that premium went higher and higher, they were able to dilute their share base more and more, print more and more shares and more of these convertible notes in order to go out and be able to essentially acquire more Bitcoin with the capital that basically the financial markets were able to give them to these convertible IOUs, right? Well, since back here in late November, right? So we're coming up here again. It's no surprise. You might notice some alignment here in regards to the slowdown in the trend. As the MicroStrategy premium has started to decline over time and is set in lower highs consistently since then, we are seeing that there are less Bitcoin purchases from MicroStrategy, that the fuel that was really fanning the flames of all these Bitcoin purchases and a lot of the Bitcoin demand that MicroStrategy was, I think, rightfully taking advantage of here to some extent. I think it's a smart system, is now starting to wane here. So this is going to have ramifications for Bitcoin. When the MicroStrategy premium is down nearly 38, 39%, that is going to mean MicroStrategy has less wiggle room to be able to go out and make such expansive Bitcoin purchases. Again, not really doom and gloom. It's just something to keep in mind. This could improve over time, but so far we have been unable to find support on the 21-day moving average, and the 100-day we're spending a lot more time with here, which is not a good look. The last time we did this back here in May, we bounced off of it very confidently, right? Here in August, we had some more consolidation here, but this was at a period of time when Bitcoin was at much lower prices. Now we're at a period of time here where Bitcoin is trading at much higher ranges here. So we've got to see whether or not we can really get above that 21-day moving average, or if we're destined to go to the 200-day, or potentially the kind of doomsday scenario here that I think would easily push Bitcoin to our target range, our kind of bearish target range of around like 70, 80K, would be coming down here to the 200-week, a real unwinding of the expansion of the MicroStrategy premium, right? Which probably shouldn't exist. It's a bit of a game of musical chairs, if you will, at the end of the day, but still, put aside that and the debate around that, it would be basically wiping out the 2024 premium that was built up over the last year. If that plays out, then that is easily going to not only prevent MicroStrategy from raising anywhere near the sum of Bitcoin they have been over the last couple of months for purchase, but especially at these prices, mind you, right? The price is going higher, so they need to raise more capital. But beyond that as well, we also need to keep in mind here that essentially, beyond that, the ETF inflows will probably decline with that as well. Now, on the flip side, if the MicroStrategy premium does start to build back up again, if the ETF inflows start to show more promise here in the next week, then you're probably going to start seeing that reflected in price. And that's really what I want to bring it back to here, because I know I talked a good amount about inflows and outflows. I want to kind of help visualize it. But at the end of the day, Bitcoin is at a pretty critical moment here. We've had many retests here of this prior line of resistance being made into new support. And while that's very good to see that this level has been solidified here, if we cannot reclaim the 21-day moving average over the next week or two and continue to face resistance here and press below that 100-day moving average, we've got a ways to go to the 200-day, which is the next moving average, and will be the likely target here. And if we break that line of support, it's going to look very top-heavy. It's going to look like a sign here the markets are ready for a more substantial correction. It doesn't mean that we have to go into a bear market, but it does mean very clearly that Bitcoin's probably got more downside to go. And that also brings us to talking again about altcoins as well in just a moment. But the main point I just want to kind of close on is that for Bitcoin, this is why I think the 200-day, somewhere here around 80K, is totally within the realm of possibility. That would be, basically from 109,000 Bitcoin, roughly around a 25% correction in regards to market value. That is nothing in regards to history for Bitcoin. Bitcoin has gone through much worse corrections than this before. So my main point here is that this is totally within the realm of possibility. Now, in regards to it, let's say things improving and reclaiming the 21-day, I would say that the next big target to look for would be a big even level, especially a couple $1,000 expansion from where we are now to something like, for example, $120,000, right? Which would give us a nice 23% return from this point on. From there, though, I would really get cautionary, as I already am right now, that we're really starting to stretch it here, that Bitcoin is probably, considering its decaying multiples over time, probably not going to go much higher than that, right? Again, do with that as what you will, just trying to keep everyone a bit more cautious here, as we are not on the lower end of the market. We are definitely on the deeper stages here. It doesn't matter if you believe in the 4-year cycle. Doesn't mean if you don't believe in that and you're just kind of trying to broadly measure, for example, on the decaying returns over time of Bitcoin and financial markets. Those are all important things to keep in mind. Doesn't really matter. We're on the tail end of it. I think that's something not really up for debate at this point. Now, the big thing I wanted to go ahead and talk about is others market cap, because while I do believe that Bitcoin maintaining relatively strong, holding the majority of its value and not correcting significantly is going to be important for altcoins, and we still have yet to figure out whether or not that's going to happen. We have to wait for the break on one of the moving averages, either the 21-day or the 100-day, right? As well as some of our additional signs, the inflows from Microstrategy, from the ETF. The big thing I want to bring up here is a little bit of a tidbit, being a bit bullish here. I have to say that altcoins, after having a major flush down here to $220 billion, seem to have found a nice base at around $250 billion. This has been a range that has been tested at least 3 times here since back in early February, so over the last week. And while we haven't made any explosive move yet, we are starting to reclaim some of the 4-hour moving averages. This is the next set of moving averages that I like to look at, the 9, 21, and 50 EMA moving averages that we look at on the 4-hour time frame. And while we can obviously, what's nice about these indicators is I have them set to stick to the 4-hour time frame. We could really bounce around to the daily or the weekly or even shorter time frames. But the main thing here is that I'm looking for is really a reclaim here of $280 billion. Because if we're able to get above that 50 EMA in the 4-hour time frame, that could very well be our cue here, especially after such a capitulative candle, that we're really ready to start making a reversal. And that's a really great entry point versus where we were just back in early December at $440 billion. A huge wipeout in value from the altcoin market. Percentage terms, even if we're not taking it from bottom to top, which would be a clear 50% correction, that already has got me really interested. But beyond that as well, being able to get in at altcoins at around a 35% discount is pretty interesting to me. That looks like where we could have some favorable setups in the market, and we just have to look for strong players that are exhibiting good price action, outpacing Bitcoin, right? But that's another point that I want to bring up here. While we may be finally finding a temporary bottom after a more than 2-month correction here in altcoins from around 12.2% dominance down here to 8.5, new fresh lows in altcoin dominance. I just want to kind of bring that up versus all the way back since here in June of 2023. So altcoins really have lost a lot of steam here. The big thing I want to emphasize is that there aren't many plays that are looking too hot, right? There are some that are exhibiting better price action than those, maybe those who are more oversold and are starting to maybe gain back a bit quicker than those that weren't sold so heavily. But take a look at ETH. I mean, just unable consistently for the greater part of the last month to even test the 50 EMA on the 4-hour time frame, every single time getting shot down. We had one failed attempt here at the end of January, and then a huge flush out here, huge capitulation, and no one really stepping in to buy, right? It looks a little bit different for Solana. Solana now is coiling here against those moving averages, definitely looking a bit more bullish, right? This is what you want to see, is that those shorter term time frame moving averages help to act as support and press against that 50 EMA. Like the pressure's building up. There's signs within the price that the MAs are showing that essentially are showcasing we're ready for a potential spring up here. So, for example, while ETH doesn't look good, Solana looks pretty good. If we take a look at some of our mid-cap plays, same exact thing here with Fetch. Looking good, right? Major capitulative breakdown here, huge correction. I mean, if we're taking it all the way back here to March of 2024, this is trading right now against Bitcoin at an 84% discount, right? At the absolute lows, 86%. That's the type of percentage decline that I'm looking for to go long on some plays, because anyone who had really had positions who've been leveraged long, they're flushed out here, right? So there's almost like a reset here on the market. So if I get a nice clean breakout above that 4-hour EMA and the 50 EMA on the 4-hour time frame, especially when I just kind of zoom out here into the longer term trend of things, right? It's the level we highlighted within the Dash report. You can see here that we're on the lower end spectrum. We've cut out a lot of the froth, a lot of the excess valuation, which gives us that room to be able to trade at a much higher premium. We've had multiple green days here. I like seeing that. So we're going to be watching for plays that are starting to exhibit that early stage strength. And as you can see, when you get above those moving averages that generally act as resistance, you can have even nice short-term rebounds or potentially the beginning of a much broader move, especially at these lower levels. The other thing I wanted to talk about, another play that we used to talk a pretty decent amount about here, is Render. Again, this, similar to Fetch, plays into the AI deep-in narrative. This is a strong narrative in equities and the asset markets as a whole, as AI has been the top trend. So the sentiment will likely carry over into the crypto space. So for me, I can see that we're already getting a reclaim on those shorter term time frame moving averages, the 9 and 21 4-hour EMA. Question is if we get a nice clean breakout here above the 50 EMA on the 4-hour time frame, the orange line, which again has been really playing as resistance since back here for nearly a month now. Again, there's been some failed attempts and breakouts before at much higher price levels. Now, with the price being at a really significant discount against Bitcoin, if we just, again, take a step back here, look at some of these plays and how much they have declined, right, since we've said to kind of stay away from altcoins, 78%, not to mention the absolute capitulative lows, 82%. And another one here, of course, that we've talked about before, which is Stacks, one of the big Bitcoin infrastructure plays. Again, same exact scenario here, starting to reclaim some of those shorter EMAs and now looking like it's got a solid chance to retest against that 54-hour EMA. And not too far away, right? This would be, again, probably around here, around 1,000, 10,000 sats, give or take, whatever the actual number is, but a couple percentage points from where we are now. Not too far away from those capitulative lows. So you're still getting this at a much lower price. And take a look here if we just take it to the weekly chart. I mean, zooming out here, it becomes clear that we are probably on the more bearish end, right? We've gone through a lot of the pullback here from the general range of historic resistance. I would say that at a minimum, while it's no guarantee that it's ever going to reclaim there or even, go up to, for example, where it was back here in November or December, at a minimum, you've got a better risk reward setup here entering in at this range than you did, say, a month ago or 2 months ago or 3 months ago, right? Let alone back here in March or April of 2024. So some of these altcoins have been in a significant decline here for the past year and may very well finally get their moment. Outside of this, I want to talk about meme coins. Now, what we're seeing here in meme coins is quite actually, at least from what I'm seeing around the larger cap plays, which really dictate a lot of the volume and a lot of the valuation in the market, we're seeing a lot of weakness. Still down here after these capitulative lows, Dogecoin still facing resistance at that 9 and 21 EMA. I'm also seeing as well in PEPE, right, not really being able to reclaim, kind of chopping within the averages right now. And again, these are plays that if we just kind of zoom out here, we turn off, again, the drawings and even the indicators, right, just looking purely price, I've gone through pretty significant corrections here, right? If we're taking a look in regards to price, they faded a lot of their gains over the past few months since back here mid-November against Bitcoin. And that's really what matters here. We want to see these plays at a really nice discount, but we also need to see the initial signs here that they're starting to return, that they're going to start outpacing Bitcoin. That's very vital here in regards to the performance long term. But anyways, again, considering here that these are at a much lower price point, I'm definitely, while so many people are probably staying away from altcoins, not wanting to touch them, I'm starting to see whether or not there's some opportunities here, even if in the event that Bitcoin continues correcting. And I hope this shows, again, at the end of the day, guys, if you watch my channel, you don't just look at the title or the thumbnail or, just listen to what other people say and stuff. I hope you guys can see that I'm not here to be overtly bearish on crypto. There is still a lot of great volatility and opportunity in these markets. Not as much as there used to be, which is one of my biggest points that I bring up, but if you can be a bit more cunning, if you can be smart about when you enter and when you exit, be a bit more cutthroat because that's what the market is like now, right? Then essentially we can really make some great returns here in altcoins. There could still be opportunities, but you have to set your standards high. You can't buy here when everyone's telling you about you need to buy, right? We have to buy when no one is willing to buy, when there's blood in the streets, when leveraged longs are getting liquidated, and we're waiting patient, trading spot on some of the altcoin plays that could really do a 3 or 5x over the next couple of months. Realistically speaking, it's definitely within the realm of possibility. So we got a lot to unpack here over the next couple months, guys. We're going to keep an eye here on the broad indices as well. With meme coins down about 50%, most broad indices down anywhere from 33, 50, potentially up to 60, 70%. We're going to be looking for which plays start to signal those early stage signs of strength, which narratives are taking off, right? Because there is always a chance that that could play out. Again, I always heed caution here of a longer term Bitcoin correction, but so far we're far away from having to worry about that right now in regards to seeing those kind of signs present themselves. I think at a minimum, altcoins do provide a decent opportunity here to look for some trading pairs for a potential oversold bounce. Maybe not an altcoin cycle, but at a minimum, some significant move in the market. Anyways, I rambled on a good amount here, guys. One last thing I wanted to let you guys know about as well in regards to all the upcoming narratives in the space. If you guys haven't been keeping up with Energy, which is one of our long-term partners here on the channel, I've been following Tommy for a long time in the crypto space. If you guys haven't been keeping up with Energy as of recent, I definitely recommend you do, because their NFT marketplace, again, one of the narratives that really might emerge in a big way going into 2025, right? They have their GMI marketplace. They're going to make it marketplace for NFTs, which is focused on creator royalties and protecting users from the various scams and wallet theft that's been going on in the NFT space. They're going through not only right now the initial stages of their marketplace, they've had it launched here for some time, but they also have the GMI airdrop campaign. So if you guys are interested in being able to get GMI tokens in many ways for free, you don't have to always put up liquidity or do, for example, any kind of trading. There are a lot of different ways where you can refer people, you can share it on social media, create also NFT collections as well. And also, if you're already a previous holder of NFTs, right, there are all types of different ways where you're able to earn here within the GMI platform. If you want to track where you stand as well on the leaderboards to understand how much of the rewards you might be eligible for, right, then you can do all of that here. But there are a lot of really great ways where, again, you don't have to put up any capital, and you can simply just be able to get additional bonuses by promoting it on socials, using your referral link, which will increase and give you additional bonuses on your entire rewards. There are lots of different ways where you can do this for free. Or if you're really interested in Energy as a blockchain, I would first definitely recommend you research into it, look into it, and then you can maybe provide liquidity on Energy Swap or other different types of ways to get involved. At the end of the day, Energy is one of the few blockchains that I feel is actually tackling the security issue in crypto, which is still persistent to this day. Tommy and I sometimes feel like we're going a bit crazy because it's like, you just see constant thefts, you see constant rug pulls and exploits. This is one of the few blockchains where DeFi, I think, could really start to thrive, that NFTs could start to thrive, that even meme coins as well can do really well on. So I think of it as a kind of broad infrastructure play long term. I like the vision of the project. If you're interested, check out the link down below in the description. But that's it for today's video, guys. I hope you all enjoyed this video. If you did, consider dropping a like. It's a great way to support the channel and the content we put out here. And I hope you guys have a phenomenal rest of your day wherever you are. And I'll see you all right back here on the next video. Take care, everyone.